Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning pre-jobs report, pre-market webcast. So just real quickly, jobs is in about an hour and 5 minutes. Some observations from yesterday. Yesterday, the Bears took this down. Let me tighten this up. Bears took price right down and tested the daily mid-band in the 54 area. They were unable to break it. Bulls defended it, and they took them up the rest of the day. The byproduct of all this interaction with the daily mid-band is this continued narrowing or compression of the daily Bollinger Bands. So you can see down here, the bands are compressed. They're currently trading, right around 1.5, 1.6. That doesn't mean that there's going to be expansion today. I mean, there's a catalyst for expansion this morning, theoretically, in the jobs report, but it doesn't mean it has to be today. But just understand that we are compressing. We've been compressing since basically the second week of December, and this isn't the first time we've seen this post-December trade into January. A few years ago, we did the same thing, and the expansion, at that time was down. Doesn't mean it'll be down this time. One of the most dangerous things you can do in a period of Bollinger Band compression on the daily chart is to try to anticipate the direction of the expansion. It's not worth it. The risk in being wrong is immense. And the reality is that when these things break, there's typically plenty of time to get involved in the move. You just have to be, you have to be vigilant, you have to be proactive, and you got to get involved when it's time to get involved. But missing those few handles when it starts isn't worth it, because if you're wrong, then you are the squeeze, or you are the waterfall down. Don't do it. Don't be that person. It's not worth it. So as we head into jobs today, let's hop over an hourly chart. So here's that higher low at the daily mid-band. Back here earlier this week, the Bears couldn't hold the weekly pivot. Higher low. This is low from Friday. Now, they still haven't figured out 67.5. And I'm going to be watching the reaction to jobs very closely to see if they can figure out 67.5. If the reaction to the jobs report is a move to 67.5 and a rejection, that's something the Bears can really try to build upon. But they haven't, I'll say the same thing today that I said yesterday. The Bears haven't accomplished anything until they convert the daily mid-band and weekly pivot on a closing basis. They've got to trade below them, they've got to close below them, and then they've got to follow through. Now, if they do that, as a function of what we just looked at on the daily chart, you're going to get that downward expansion. Absolutely. If the reaction is positive and we get up over the top of 67.5 and convert that to support, reach up and make a new high, then that's the kind of squeeze that could cause an upward expansion, and the Bulls would own the short-term next leg on the chart. So as far as the jobs report itself is concerned, don't try to game it. Don't trade in anticipation of what you think that the reaction is going to be. There's no, the reality is, and I say this every month, if you do that and you're right, you'll probably cut the trade for a few handles because you're just it's moving so fast and you're so nervous and you're so excited that it went right, you'll just pull it off. If you're wrong, you'll hold it because you want to be right. So either you're going to take a really big red trade or you're going to take probably a really small green trade. And I'm not speaking for everybody, but I'm speaking for the vast majority of traders. A better way to approach it, in my opinion, and how we approach it in the room is wait for the number, get a reaction, see what the range is off the reaction, and then, you'll either be getting some higher lows or some lower highs, and eventually it'll break out or break down. Typical opportunities with defined risk will spring from that. I think that's a better way for your account's sake to trade the jobs report. All right, that's all I've got. Have a great weekend.
Follow us on Twitter @PrincetonTrader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.